Today, we're going to be talking about contingencies on a contract, contingencies on buying a home when you still have a home to sell, and how that works. I tell agents all the time that work for me, you need to reach out to the lenders a week before. Just want to make sure that there's no issues, because once that loan commitment comes out and you've provided that loan commitment, even if it's before its due date, it's now solidified and locked you into the contract. And if something goes wrong, you're going to lose your deposit.
Most of the time on a standard transaction, the seller's listing their property because they want to sell, and they don't want to sit around for 6 months, 3 months, 2 months. They don't want to sit around for 3 weeks. They want to close. That's where, as a listing agent or as a seller, you refuse to accept anything that is not under contract already, that's closing more than 2-3 weeks out, so there's no more uncertainty. And you try to structure the deal with some benefits to you, where you can continue to market the property with the kickout clause, and you can protect yourself that way as a seller. And then the buyer inherently is protected by this contingency. They're protected by the loan approval period, and they're protected by the inspection period.
Hi, everyone. Welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week, we talk about something that'll help you make a little money, save a little money, or maybe just help you navigate this crazy world that we live in. And as I always say, oh my gosh, is it crazy? Today, we're going to be talking about contingencies on a contract, contingencies on buying a home when you still have a home to sell, and how that works. With me today is Nicholas Fierella with JK Closing Attorneys. They are one of the title companies that we use, and they are awesome. They are very responsive. Nick just had a baby. Well, he didn't personally have it, but he just had a baby, and he is still very helpful during this transitioning time for him. So welcome, Nick.
Thank you for having me. And yes, definitely transition.
Yeah. I heard that the baby, you're at home today doing the show, and you said, I hope you can't hear the baby crying in the back. So
yeah, even with the sound canceling headphones, I can still hear him. So he's been really good, though. He's been really good. He hasn't really been crying. He's been sleeping. We just have to make sure we're feeding him a little bit. So we're waking him up every 3 hours to feed him.
Oh, okay. You have to wake him up?
Yeah, he's great. He's that great that we have to wake him up to feed him.
Wow. Okay. I didn't have those problems, and I wouldn't call those problems. I'd call that that's amazing. So
no, it's a blessing.
Yeah. So we were talking the other day, because what got me on this topic was I had a listing that we took an offer contingent on the sale of the buyer's home. And there was a couple of things that had happened in the process. First thing that had happened in the process, the seller of the home was already using another realtor to purchase a home that I was selling. And that realtor was kind of acting like I should not have allowed them to do this. And my thought as an agent is, and I feel like I'm a very successful agent, my thought as an agent is you got to give people options in order to be able to move up in the world. And people don't have money just laying around, right? It's not like we took the offer and then they had to go sell their house. It was already under contract. So that was one facet of it. And then the other facet was, it was contingent on the sale of their home, and when the day that they were supposed to close on their home came and went, and they did not close on it, there's like little questions that happen, like, do you start counting days from Sunday even though it's not business days, it's calendar days, just because certain things like end on a certain day, and if something falls on a Saturday, it would move to a Monday. So I wasn't sure, like, okay, it was supposed to close on Saturday, which means it really would have closed on Monday. Did the 3 days start counting from Monday, or do they start counting from Sunday? And I know this is like very complicated, but there's a lot of things that we have questions about, and a lot of reasons why we should be using attorneys like yourself. So
100%. I, not biased, will say use an attorney on a transaction. I have told people that I don't even get along with, for whatever reason, hey, I still think you should use an attorney. And doesn't have to be me. It doesn't have to be an attorney in my office. I will still advocate for the use of an attorney, because you never know when one's needed. You never know when there might be a spin on something as simple as this sale of buyer's property addendum that we're talking about. So you just never know. And it's always good to have somebody watching your back. So that's part one. Part two of this agreement that, you were saying about the days and about how this contingency is in place. A lot of people, like you said, cannot buy anything I won't even go to a, just any type of real estate without selling something to get some collateral. That's the general consensus, that they need some money to put down to parlay into another purchase. The exception is when people can just go freely buy things and not do that. But for the most part, people have to buy and sell, or sell to buy. And what is a safety net for buyers is this sale of buyer's property rider that comes with the Florida as is residential contract. What it does is it allows the buyer a little protection to allow them to sell their home by a certain agreed upon date. And if they do not sell their home by that date that's provided on the addendum, then they must let the seller know in writing within 3 days of that supposed closing date of whether the property closed or not. If they do not provide that notice, then this protection gets washed, and the buyer is going to be locked into purchasing that property, whether or not they have the funds or not. Which would mean if they cannot close for whatever reason, then their deposit's at risk. So going back to that 3 days, it starts counting. So let's say you have a date of today is the 11th. So you have the 11th as the closing date marked on that rider. So that rider says if the sale of the buyer's property does not close by blank, so let's say March 11th, buyer may, within 3 days thereafter, deliver written notice to seller terminating this contract, in which the event the deposit shall be refunded to the buyer. So that 3 days, it starts tomorrow, day one, the following day, day two, the following day after that, day three. So that would be today's, 11th, 12th, 13th, 14th. So in that case, you have 3 days to give that notice. If you don't, you're locked in. If you do, you can terminate the contract, get your deposit back.
Or you can extend the date for the closing on your home, which
Of course.
originally I was asked for, and I said, no, we're not doing that. But yet they all just kept moving along, and I'm like, okay, so, I'm hopeful. But the thing is like, I personally feel that people should, give that opportunity to people. But there's a lot of agents out there that do not feel that should happen. They don't want that. They feel it's risky.
Well, it is, I mean, in a sense, but at the same time, you might not have a stronger offer. So what happens if somebody comes in, you have a property, let's use generic numbers here, that's listed at 500,000. You have a offer that's 400,000, all cash, no contingencies, or you have one that's 600,000 with this contingency. Is it worth it to go
I would.
for 100? Exactly. 100, that's a $200,000 swing right there. One, you're getting 100,000 over ask. One, you're getting 100,000 under ask. A $200,000 swing right there. So when you have those two offers presented to you as a seller and as a listing agent, obviously that's a dealer's choice as to how you feel which one's stronger. But one of them, you might end up walking away with $200,000 more than the other. And if those are your only two offers on the table, imagine it's been on the market for a month. Those are only two offers you've gotten. Does it really weaken the offer? In a sense, yes, because it gives the buyer an out. But then there's things that you can do to counter it. What a seller can do and what a listing agent can do is on that date where it has to close by, tighten that window a little bit. So you're giving the buyer a contingency for 2 weeks versus 90 days. So they need to have it closed within 2 weeks. So in that case, you're only waiting 2 weeks. Usually an inspection period is 7 to 10 days anyway. It's only a little bit more than the inspection period. And then it's usually within the financing loan approval period, which this goes hand in hand with the loan approval period, because usually in order to purchase the property and obtain the loan, like we were talking about earlier, they need the funds from this sale. to be able to qualify for the loan and purchase the property. So usually they're hand in hand. So if you knock this contingency out prior to that, they're still protected by the loan approval period. So ultimately, at the end of the day, yes, it provides another contingency, provides a safety net for the buyer. It's great to use when you have a buyer. Everything's fact specific. And sometimes it helps, having it in place, but having a smaller window. There's different ways a seller can counter it, and there's different ways a seller can approach the situation. But again, all fact specific.
So have you seen anything in this particular instance that's gone awry? I mean, I'm sure you've seen most of them have gone smoothly, right?
Most go smoothly, most close, but as we know, real estate transactions always have a speed bump here or there. Simultaneous closings or closings that rely on other closings are always a little bit more stressful than others because of it's not just one transaction. You're worried about 4 different parties here moving in different directions. So yes, I've seen a buyer not give the notice here and then not close. And yeah, you've seen it. We were talking about it yesterday. There's situations where some people aren't prudent on these timelines and deadlines, don't give the notice, and then when they don't give the notice, as I mentioned before, they're locked into the contract. So now this contingency gets washed away, and then they're locked in to close. And then if something happens where they can't close, then there's a default and the seller can claim the deposit. So yeah, I've seen it go awry, and it's usually worked itself out because ultimately when you make it that far in a transaction, parties want to close, but sometimes it costs the buyer money. You messed up, give me back a credit of X amount of dollars for you messing up for you to move to closing.
Well, that's the other thing. I think it matters who you work with, because I tell agents all the time that work for me, not agents that are on the other side, but how important it is that you need to reach out to the lenders a week before in an email asking them, I just want to make sure that there's no issues. Because once that loan commitment comes out and you've provided that loan commitment, even if it's before its due date, it's now solidified and locked you into the contract. And if something goes wrong, you're going to lose your deposit. Now, I'm not allowed to interpret the contract because I'm not a lawyer, but, I just have to say that. But that's why it's just so very important for people to make sure that when working with an agent, they work with somebody that makes sure that they're looking out for your best interest. It only makes sense that a buyer would be scared or, that they would lose their money. And now I guarantee you, these people have no idea that their money is at risk right now. So they must be pretty damn confident, because I reached out to their agent, their lender on their purchase, who never got back to us because they don't care.
Wow. Yeah, the lender ultimately they're trying to close their deal. They're getting paid on their deal. And that has nothing to do with, this deal. So it's tough when you're trying to balance multiple parties. And that's where this rider, which is very simple on its face, can get very complicated, because now you're dealing with another party's lender who is buying our buyer's sale. So now we have to worry about the lender working on our buyer's sale. We have to worry about our buyer's buyer.
Right. So the question is how do we streamline this a little bit better? So let's go to commercial break. And when we come back, let's talk about how can we streamline this a little bit better.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FIRPTA withholding.
Contact JK Closing Attorneys today. at 954-332-3111. Again, that is 954-332-3111.
Priority One Credit Union of Florida is a welcoming credit union that makes your financial success our number one priority. We offer lower loan rates, higher deposit rates, and common sense local loan approvals, with nationwide access through shared branching.
Hi, I'm Dina Hennessy, President and CEO at Priority One Credit Union. We are open to the community. Anyone can be a member of our credit union, and we would love to have you.
Contact us today at 954-335-5100. You can also reach us at PriorityOneFL.org. Your financial success is our priority. That's 954-335-5100.
All roads lead home with Fairway Home Mortgage. When it comes to home financing, who you work with matters. At Fairway Home Mortgage, we combine the strength of a national lender with the care and accessibility of local mortgage experts. We offer a wide range of home financing solutions, personalized guidance, and a streamlined process designed to keep things simple, from application to closing. Because at Fairway, home isn't just what we finance, it's what drives everything we do. Connect with Cliff Bernstein, Branch Manager, NMLS number 7853 at 561-213-6852 to see what your options are today. Company NMLS number 2289. This is not an offer to enter into an agreement. Not all customers will qualify. Subject to underwriting approval, other terms and conditions may apply. Equal housing opportunity. Loan Officer NMLS number 7853.
Hi, everyone, and welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. Now, you wonder, how does this go hand in hand with making money? Well, guess what? If I lose your money, you didn't make any money. But if you sell your house, especially with a contingency, and sometimes people are willing to pay a little bit more if you're willing to take their contingency. I found that they're a little bit more feeling that they're willing to do that. So that's the good news. But the question I said before we went to commercial break was, how do we streamline this process?
Well, there's a couple different things that a seller and a listing agent can do if they're going to take a contingency like this. One, you're looking at comparing the 2 or 3 or 4 offers if you have multiple offers. You can use other offers as leverage to try to get a higher purchase price, a higher deposit, different things that could be added to make a seller feel more comfortable with this particular buyer. One thing that really is a strategic avenue would be the kickout clause. If you see a sale of buyer's property contingency, hey, okay, I'm okay taking that, but on the flip side, I want a kickout clause. I want to be able to market the property still while you're, dealing with your sale. What happens if that doesn't go through? Then I just wasted 30 days. At least this way, I can still market the property. See if there's another buyer that's interested. If that buyer is interested, you work that kickout clause in a way where maybe they drop this contingency as a way to stay in the contract or get kicked out. You can spin the kickout clause any way you want it. Usually it's adding another deposit. But in this case, you can use it as a tool to remove this contingency or to remove any of the other contingencies and
But a
move
lot of
forward.
people can't. That's the problem.
But then you negotiate maybe a credit. It's all negotiation. Everything is a negotiation from start to finish. So if they come in asking for a sale of buyer's property, you negotiate back, yeah, okay, we can take that, but I'm going to continue to market the property. And my kickout clause is going to say, you're going to come in with more of a deposit. If I find another buyer, you're going to, remove this contingency at least. And, even if they remove this contingency, they still have protections. The inspection period and the financing, the loan approval period are both things that aren't waived by using this contingency. So they're still in place. And usually, like I said earlier, the loan approval period is going to go, 20 to 30 days usually. So they have a window there of protection. So it's not like they're taking that big of a risk if they have a good relationship with the lender. If you, as the listing agent, have discussed with buyer's lender, their loan. If it's going to be a complicated one or a pretty simple, loan. If it's simple, then the conditions aren't going to be that crazy. They should be able to get cleared and have loan approval within 3 weeks. Most lenders
The
can
loan
do that
approval
within
is
20
not
days
the
now.
well. The loan approval with the contingency is not the problem. What most people don't understand, I mean, you do, but this is where we start talking Chinese or Japanese, whatever you want to say, another language. We start to once the loan commitment comes in, that's great. The buyer's ready to buy, but we still have that contingency lingering out there. So until that contingency is removed, all the other stuff doesn't make a difference. So I think even maybe trying to streamline it would be making sure that the buyer on their home has a shorter loan commitment time as well, and following up on all of that. So
Hopefully, from our end as a seller, if we're getting this contract with a rider V, sale of buyer's property rider attached to it, hopefully there's a checkbox on there that says buyer's property is currently under contract or is not currently under contract. Part of the strategy there is the seller can only take this addendum if they are under contract, can only take this offer.
oh, absolutely.
If they're already under
I would never
contract, yeah.
take it unless the property's been on the market for 300 days. I would never take an offer contingent on the sale of someone's home that isn't currently under contract, and also past contingencies like inspection, loan commitment, those kind of things, appraisal.
Obviously,
maybe
I
not
saw one
loan
that was.
commitment, but appraisal and inspections.
I've seen one where it was 180 days, but this was again fact specific. The seller didn't want to sell initially. The seller wanted to sell later on. The seller had to find their own purchase, so on their flip side, and they allowed the buyer the time to find a seller or to find a seller for their house or a buyer for their house. Sorry. So in that example, again, fact specific, it worked for everybody to have a 180-day contingency plan because the seller wasn't looking to sell right then. But they went into contract anyway, and this is how they structured it.
And
And
the
it
buyer
worked out,
waited
they
6
closed.
months. See, here's where the things become, how long is the contingency for the loan commitment? What happens if the buyer loses their job? What happens if the buyer's financial status changes? Like, that's a lot of risk.
100%. And like I said, the seller didn't want to sell in that case. So, and they didn't care to sell right at that moment. Most of the time on a standard transaction, the seller's listing their property because they want to sell. And they don't want to sit around for 6 months, 3 months, 2 months. They don't want to sit around for 3 weeks. They want to close. So, that's where, as a listing agent or as a seller, you refuse to accept anything that is not under contract already, that's closing more than 2-3 weeks out, so there's no more uncertainty, and you try to structure the deal with some benefits to you where you can continue to market the property with the kickout clause, and you can protect yourself that way as a seller. And then the buyer inherently is protected by this contingency. They're protected by the loan approval period, and they're protected by the inspection period. So you have the seller just countering a little bit to protect themselves, to allow themselves to market the property and allow themselves to, eventually find another buyer. And if this buyer wants to stay, then they remove all the contingencies and close. Sometimes a buyer really wants the property. They have, the word of the buyer on their property. Their lender is all good. The loan's good. There's just a delay for some reason, and they take the risk and they go for it. Again, very fact specific scenario each time this comes up.
Well, if somebody is thinking about doing a transaction like this, I would say you definitely need to give me a call, Laura Sanders, Remax Direct, 954-650-0827 at lauracell.com is my website. And if you are going to get yourself into one of these kind of deals, you definitely need to give JK Closings and speak to Nick or CJ. What's a good number for you guys?
954-779-5000.
That's definitely the best way to get a hold of you guys. They are always monitoring that phone number 24/7. I don't know if anybody responds in the middle of the night, but I do know that as soon as somebody does wake up, even if it's 4 a.m., they will respond. Because there's
I
always
called somebody
somebody.
at 9:30 last night. So, because I
Oh,
saw a
yeah?
message come in. Yeah.
Wow. So, and now Nick is back to work.
Yep.
A super dad.
Trying to be.
Yeah. So tell our audience, what's the one thing so far that you're a little shocked about with having a baby?
The amount of diapers.
Really?
I
So
will say we are running through diapers.
how many diapers do you go through typically?
I feel like it's like 10 a day at a minimum. Like we were running through our supply that we had that I thought was going to last forever.
Well, you don't need a lot of the small ones. You need, I say, stay 3s and 4s seem to stick around a little bit longer.
Well, the one we had to actually buy new ones.
Newborn.
So newborn, we had to buy additional newborns. So it's been crazy.
And how much does he weigh?
He weighed 7 pounds 3 ounces when he was born. He dropped a little bit, and now we're waiting to see if he got back to birth weight. I think he did. He's been growing steadily for the last week, so I think we're in the clear.
Did you
But
get him on your diet?
yeah,
Did you get him on the plan?
my diet, no, not on my plan. He needs to be on a fat gaining plan, not my plan. My plan's fat losing plan.
Well, like always, we do appreciate you and JK Closing Attorneys being part of our show and helping us to navigate this crazy world that we live in, all the legal legalities that go into this job. It is not easy being a realtor, no matter what they say. We're the only profession that goes out there. We don't get paid until we close the deal. And honestly, Nick, without you and CJ, we could not do it. There's just questions every day. And now that I see that you're up and running, I'm going to start bothering you again now that the
Go
baby
ahead.
is here. So get ready. And again, like
I'm
always,
ready.
great. And I am, like, again, thank you so much. And like always, I want to thank everyone for listening and those that watch Making Money with Laura Sanders. And until next week, make it a great one.